Today we're going to go over 3 trade reviews using the supply and demand methodology, as well as cover a couple of important notes that we need to talk about. Because in my last video, I think it was a traveling video, I mentioned I was going to give you guys an update on my new trading plan and the new rule that I changed in my trading plan. All right, so we're going to cover that at the end. We're going to go into the 3 trade reviews, 1 winner, 1 loser, 1 break even, and add any extra notes. So shouldn't be too long. We're going to get right into it. I deleted the analysis, so we're going to pop over to the Discord. And the trade that we're going to be looking at is oil for this first one. This is a winning trade. I really like this trade. I mean, the market overall in general over the last 45 days. Let me blow this up so you guys can see it better. All right, there we go. Over the last 45 days, we know prices have made lower lows, lower highs in commodities. Wheat, sugar, corn, soybeans, right? They've been crashing over the last 45 days. So short term, looking for selling opportunities. Long term, very bullish. All right, so we have this daily demand zone. This is a demand zone that's been on my charts for quite some time. Why? Well, this was the demand that was created during the Ukraine and Russia war. When it first started, it created this big, strong move to the upside. And then since then, it's been tested once, twice, 3 times, 4 times. All right. So I definitely need to be aware of this seems to be where buyers are stepping into the market, as well as prices coming near this 200 moving average, this blue line down here. Let me move this over so you guys can see. I'm not sure if I'm in the way with my little video camera. So definitely, I like looking for buying opportunities in here, but because the market has been dropping nonstop over the last 45 days, you can see from up here, the high, it's been dropping, right? So clearly shorts are a lot better. So for a quick short-term trade, I like looking for selling opportunities. So what I'm going to do is I'm going to go down to a lower time frame. And what I need to see is I draw out the exact same trade. You guys seen all my traveling videos and trading videos, and we talk about trade reviews and all my other supply and demand videos. It's the exact same setup every single time. A very important tip that I can give you guys is to be very consistent with your top-down analysis, your trade setup every single time. The last 20 trades that you have taken should look very identical to the last 20 trades. They should all look the same. Okay, that's how you're going to get consistent results, either for the good or for the bad. But hey, if it's for the bad and you're down, you're negative, okay, well, review and see if you did anything wrong. Maybe if you change a certain rule, how would that affect your win rate? How would that affect your profit loss for the whole 20 trades? So it's very important to have the same quality setup. And you'll see I'm always taking this little supply zone. Higher highs, higher lows, breaking structure, removing that opposing zone. So here we have the break in upward momentum, higher high, higher low, right? We broke that upward momentum with these candlesticks over here. We removed this opposing demand zone. So that's 2 confirmations that I need to see, as well as we have a very strong quality imbalance. Here on this leg out candlestick, let me scroll in so you guys can see. Notice the strength of the leg out. We have a new member that joined the Moneyball Trading 90-day program where we're taking traders to consistently profitable in 90 days. That's the goal. And she came to me and she said, within the first video, within the first section of the book, I talk about the imbalance. And she's been trying to trade this methodology for the last, I think, 2 years or something like that. And there's just been so many unopened answered questions out there on the internet that nobody's willing to give. And really what she could have done is just reached out to me. And I said, yes, the imbalance is so important. This is why I've made previous videos talking about the imbalances. It's the #1 mistake that I see people making. They're trading at horrible imbalances. Notice how price is within the first leg out. It moves at least 2 to 1. Perfect. That's what I want. Prices move in a very strong fashion. We broke trend lines. We removed the opposing zone. We have a solid base up here. We are also below the 200 moving average as well. Okay, we're below the 200 moving average as well as almost reacting off of it once price comes back up into it. So we have a lot of different criteria of why prices might begin to sell off if prices return into that area. And so I sold on the pullback. Take profit was down at 3-1, very consistent with the take profits. Unfortunately, it did not get hit right away. Instead, it reversed, rallied up. Luckily, it didn't hit my break even because I moved my stop to break even after 2-1, and then it continues down. Okay. Now, what I can do, because I journal my trades like this, is after 100 trades, I can go back and say, hey, let's imagine over the last 100 trades, I made 50% on my account. What happens to my overall performance? Instead of me going for a 3-1, I start going for a 5-1 or a 6-1. Do I make more money? Do I lose more money? This is why journaling is so important. Okay, and I'm not talking about going to a random chart and saying, that's my trade. It's like you post this and share this to somebody, they're like, what are you trying to tell me? How do you expect to go back 6 months from now and understand what your top-down analysis is, how you took profits, where you took profits, how you managed the trade? You can't do it. Okay, so this is why journaling and adding as much as you can is so important. Now, this is another trade, New Zealand USD. The reason I really like this trade is because we are selling this New Zealand USD in an overall downtrend. This was a losing trade. We're also buying the US dollar because we would be selling the New Zealand, hoping the New Zealand goes down. All right. So selling the New Zealand, buying the US dollar, love it because overall the dollar this entire year, higher highs, higher lows, higher highs, higher lows, nonstop. The money is pouring into the US dollar. So I really like looking for a selling opportunity on New Zealand USD because we would be buying the dollar in this case, right? So if we pop to the daily time frame, this time frame overall downtrend, very easy, lower lows, lower highs, and then when we get into this, oops. Oh, I was drawing. Okay, if we get into this area on a 4-hour time frame, we're going to see this right here. This is what I was drawing out. That's what it's going to look like. Lower lows, lower highs. And so what prices did here on our lower time frame, going down into a smaller time frame, we broke upward trend lines, removed opposing demand zone, demand, demand. We're selling in a downtrend. Once again, look at this imbalance. Very, very strong imbalance. That's what I like to see. Okay, and then selling the pullback when prices come back up into it. Now, unfortunately, this was a stop loss. Okay. Why do I like this trade? I am selling with my overall trend being down. I am buying the US dollar. Structurally, this is the exact same setup I'll take. Breaking upward trend lines, removing pivot point zones, very strong quality score of a zone. There's a couple things. It's not just a leg out, but the base, what did it remove? What's the confirmation? How far price went? The location of what the higher time frame is doing, what price action is doing. All these little things account into this being a good quality zone, and that's what we talk about in the Moneyball trading program. Okay, so let's go on to our next one. I haven't journaled this one yet. I still got to do it. So let's go to Aussie Swiss. And this was, I hate to see this because I got out at break even. This was the demand zone. This was something called the one time frame sequence setup. Now what the one time frame sequence setup is it got created in the private group because we had people saying there was a little bit confusion with two time frames or using multiple different time frames, a higher time frame and a lower time frame. Or people were coming to me saying, I really like this trade. I really want to take it, but it's not fitting the higher time frame criteria. It's not inside a higher time frame demand zone, so I can't take it. So eventually we came to the conclusion, we said, hey, let's backtest this idea of only trading the one time frame and saying you're just looking at one time frame, but you're looking for the exact same setup every single time. And so this is exactly what it was. I did a backtesting video on this. I forget where it is. It's my YouTube. I think it's labeled like 67% win rate, 2-1 or something like that. But overall on this one, I like it because we were lower low, lower high. Here it is, lower low, rallies up, lower high. So we can draw a downward trend line like that. We break that downward trend line. we remove all this supply. All right, you know how I'm always drawing this, guys? I'm always like this. Did it do that? Okay, that's exactly what it did. It broke that downward trend, removed those opposing supply zones, and we have a very strong demand zone down here. Okay, so I bought the pullback back into here, and now my 3-to-1 take profit was right up here, if I recall, right up in there, or maybe it was right in here. I'm not too sure. But after 2-to-1, which is like right here, I moved my stop to break even, and then price reversed, came back, stopped me out for break even on this pullback right here, and then I guess continued on and would have hit my take profit. So yes, it is a sour thing to go back on and look at when that type of stuff happens, but it is part of the game. If you choose not to move your stop loss to break even, then it would be a winner, but you're going to be sweating, especially when prices go literally 2 pips away. Okay. Now, a couple things I need to address with you guys is I wanted to talk about it in my next travel video, which was supposed to be today. I'm making this video at 8, at basically 9 in the morning, my time on Friday. But I was supposed to go fishing, and then the guy calls me up and he's like, "Oh yeah, it's gonna be a rough day out there on the waters." I'm like, "It doesn't matter, man. Let's go. I'm all good for it. I got sea legs." He's like, "Oh well, it's a full moon tonight, and I don't think we should go." I go, "Hey, I'm all down." He's like, "No, we're gonna wait till tomorrow, and I'll get back to you." I said, "Okay, whatever." And then I'm like, once I heard that, I'm like, "Okay, my captain's a bitch. He doesn't want to take me. He doesn't want to make $200, right?" Which is crazy. What kind of idiot does that when you're a local Costa Rican on your local small panga boat for $200? Just missing a client, taking them out for 6 hours, $200, just like that. He's like, "No, well, we'll look to go out the next day." Right? And so he calls me up. He's like, "Hey, you ready to go fishing?" I go, "No, I already booked it with somebody else." I didn't tell him. I didn't tell him that. In fact, I didn't book it with anybody else. I said, "No, I'm just, I'm doing something else now." So I said no, and just hanged up on him. Guy lost a client. All right. So I was supposed to go fishing, do a travel video, and all that. Now that got canceled, and so that's why I'm making this trade review video. I'm panicking because this all happened within the last 24 hours. Now, what I got to talk to you about is I'll explain it in my next video on not my next, but my next travel video. I got to leave this country soon of Costa Rica. When it comes to 2 quick updates, we got to talk about this really quickly. There was a rule that I talked about that would break my losing streaks in half if I wait 3 candlesticks to get into a trade. I am no longer going to be doing that because I was not happy with the amount of trades that I was missing, right? And then on top of that, the first 4 or 5 trades that I ended up taking using that rule, right off the bat, I lost them all. So I was just pissed because when I made that a rule adjustment, all my setups that I would have taken normally all came out and be winners for the next week. I would have been like 5 winners and 3 losers or something like that with like all 3-to-1 reward the risk. And I was like, damn, that was a really good week for me. And then the next week I finally start taking the trades, waiting for 3 candlesticks, meaning waiting for 3 candlesticks to be printed and then getting into my trade, and then those just all lost. So I'm like, oh, screw this, I'm not gonna do it anymore. Another thing that's really interesting is I was reviewing my stocks, my trades, my longs for the year regarding the stock market. And if we know what's been going on in the stock market this entire year, it's been what? It's been this lower low, lower high, lower low, lower high, like that, right? So obviously your longs are not going to perform as well compared to your shorts because, well, we're in a downtrend, right? I was reviewing my longs to shorts, and it turns out I've only had like 3 or 4 winning trades in the stock market when I'm buying. Okay, that means I'm trading counter trend. And I've had like 20 losing trades when I'm trying to buy. So eliminating that completely. Now my shorts performing excellent. You will recall I was talking about I'm like a 50% when I was doing my 6-month review. I was telling you guys I'm like a 50% winner, 3-to-1s when I'm hitting my shorts in the stock market. But my longs suck. Okay, what am I doing? Completely eliminating buying the stock market. All right. This is also with the US dollar. We know if we pop over to the US dollar here, what has the market been doing this entire year? Daily time frame, higher highs, higher lows. So we know any shorts are going to be counter trend. So stop trying to sell the US dollar. Know where the money is going. There's a stat in the past that I've mentioned, and that is 20%, or sorry, there is a 20% win-loss difference between my trending markets and my counter trend markets. So I need to focus on trending markets or sideways markets. Counter trend, gone, eliminated. Bye bye. See you later. Okay? I recommend you guys do the same. Review your trades, figure out where you're losing money, where you're making money, and focus in on what you're making money. All right? This is why journaling is so important. So important. Okay? And hey, if you guys did want to become part of the Discord and the Moneyball Trading private group where we're taking traders to consistently profitable in 90 days or less, that is the goal, then you want to join the Moneyball Trading program. Then you want to head over to moneyballtrading.com by going like this, and you can sign up for the free training and sign up there as well to get access to the full program by going to courses and seeing you get all access to the Moneyball Trading program, the system, the setup, ebook, top-down analysis, community, 2x weekly mentorship classes where we go over the market watch list for the week, as well as the Wednesday trade review meetings, access to the Discord, my exact trading plan. You'll get your one-on-one training, as well as I make sure that you hand in homework and quizzes because I want to make sure that you actually understand this. All right, as well as you get the full system. So that will be in the description below. If you guys have any questions, let me know. Talking about the 3x candle rule, counter trend trading, any of the trade reviews, you let me know. If you want to reach out to me on social media, at Moneyball Austin. Okay, Facebook, Twitter, Instagram. I will see you in the next one, guys. Thank you so much. Catch you later. Bye-bye.